Now we'll see problem number 2. First we'll read the question. Ajay Limited plans, problem number 2. Ajay Limited plans to manufacture and sell 400 units of domestic appliances per month at a price of 600 each. See, what they are given is Ajay Limited plans to manufacture and sell 400 units domestic appliance per month. Per month, 400 units means totally 400 into 12. That is 4,800 units they are selling. A Limited is selling 4,800 units at a rate of 600 each. Selling price per unit is 600. The ratio of cost to selling price is as follows. They have given the ratios for cost to selling price. Raw material, packing material, direct labor, and direct expenses. Raw material is 30% of selling price, that is 600 into 30%, that is 180 rupees. Packing material is 10% of selling price. Direct labor is 15% of selling price, and direct expenses 5% of selling price. Next, what they have given is fixed overheads are estimated at 4,32,000 per annum. Total fixed overhead is 4,32,000 per annum. You can calculate per unit of fixed overhead by dividing total number of units from 4,32,000. Okay, next is the following norms are maintained for inventory management. For maintaining the inventory management, these are the following norms. That is, raw material 30 days. Minimum of 30 days requirement should be made available, and packing material is 15 days. Finished goods is 200 units. Finished goods they have given in the quantity of units. And next is work in progress is 7 days. All these four are inventory management. So using this we can find the closing stock to be maintained. And next is other particulars are given below. Credit sales represents 80% of total sales, and the dealers enjoy 30 working days credit. Balance 20% are cash sales. See, total 4,800 units. That is 400 units into 12. That is 4,800 units. Out of that, 80% of total sales is credit sales. So 4,800 into 80%. That is 3,840 units are credit sales, and remaining are cash sales. And debtors, dealers means debtors enjoy 30 working days credit. That is, we are giving 30 working days credit for debtors, and creditors allow 21 working days credit for payment. For creditors for purchase of raw materials are giving only 21 days for payment. And lag in payment of overheads and expenses are 15 days. That is, for payment of any overheads and all the expenses, labor expenses, everything, we are availing 15 days of credit. So cash requirement to be 12% of net working capital. This is the new point added compared to the problem number 1. Actually, the problem number 1, we had all the entries except this point number D, that is cash requirement should be, in the problem number 1 they gave directly that how much of cash requirement to be maintained, whereas in problem number 2 point number D they have given cash requirements to be 12% of net working capital. You are calculating net working capital only. The ultimate goal of this problem is to calculate net working capital, and the cash requirement to be maintained is 12% of such net working capital. How to calculate this we'll see. And working days in a year are to be taken as 300 for budgeting purpose. See, normally whenever they give a problem in days, we should calculate working days as 360. Okay, number of working days we should take it as 360. Whereas in some problems, if they mention directly that working days in a year are to be taken as 300 or 350, 320, then we should take 300, whatever they have given as total number of days in a year. Here they are given 300 for budgeting purpose. And prepare a working capital requirement forecast for a budgeted year, for the budget year. Okay, fine. So now we'll start the solution. Now put the heading. Problem number 2. Problem number 2. Roman number 1. Annual production and sales. Annual production and sales in units. Annual production and sales in units is equal to total units to be sold in a month is 400 is equal to 400 into 12 is equal to 4,800 units. This is very important. Like if you are not seeing this per month, that is total units sold per month. If you take it as per year, then total entire sum is gone. So you should see whether they are given number of units sold to for a month or for a year or for a quarter or for half a year. You should see that, then only you should calculate the annual production. So annual production here is 4,800 units. Below that, statement number 1, calculation of working capital requirement. Calculation of working capital requirement. Divide the page into 3 parts. Column number 1, particulars. Particulars, calculation, amount. Particulars, calculation and amount. Below that particulars, capital A. Capital A, current assets. Below that particulars, capital A, current assets. What is this working capital management? Current assets minus current liabilities will get net working capital. So below that current assets, leave 15 lines gap. Leave 15 lines gap. Below that, put the working notes. Working notes. And below that, note number 1. First, what we should calculate? Calculation of profit per unit. So note number 1, calculation of profit per unit. Calculation of profit per unit. Below that, 3 columnar table. First column particulars. First column particulars. Second column amount, and third column also amount. Particulars, amount and amount. And below that particulars, small a, selling price per unit. Selling price per unit. How much they have given as selling price per unit? 600 rupees each. So outer amount column, put 600. Outer amount column 600. Below that, small b, cost per unit. Cost per unit. What are all the different costs given here? Raw material, packing material, direct labor, direct expenses and fixed overheads. So first, raw material. Below that, raw material. How much is the raw material? What they have given is 30% of selling price. So 600 is the selling price into 30%. You will get 180 rupees. Inner amount column, put 180 rupees. Inner amount column 180. And next is packing material. Packing material is 10% of selling price. So 600 packing material. Below that, packing material 600 into 10%. 600 into 10%, which is rupees 60. Inner amount column rupees 60. And next is direct labor. Below that, direct labor. Direct labor is 15%. 15% of selling price, which means 600 into 15%, which is 90 rupees. Inner amount column 90. Inner amount column 90. And next one is direct expenses. Below direct labor is direct expenses. Direct expenses is given as 5% of selling price. So 600 into 5%. 600 into 5%, which is 30. Inner amount column, put rupees 30. And the last one is fixed overheads. Below the direct expenses is fixed overheads. How much is the fixed overheads? Fixed overheads are estimated at 4,32,000 per annum. So open a bracket. Below that fixed overheads, open a bracket. 4,32,000. 4,32,000 divided by total number of units is 4,800. 4,32,000 divided by 4,800. Close the bracket. Inner amount column, put 90 rupees. Now total it. Now total the inner amount column 180 plus 60 plus 90 plus 30 plus 90. So inner amount column total it. Outer amount column put 450. 450. The cost per unit is 450. Now total the outer amount column. 600 minus 450. Selling price is 600. Cost per unit is 450. Put the 450 within bracket. We should reduce it from 600. Selling price minus 450. Selling price, that is 600 minus 450. Total it 150 rupees. 150 rupees. Now in respect of that 150, put profit per unit. Therefore profit per unit. So here we have found what is the selling price, that is 600 rupees, and what is the cost of finished goods, that is 450 rupees, and what is the profit per unit, that is 150 rupees. Okay, that is working note number 1. Working note number 1 is profit per unit. And now come to working note number 2. Note number 2. Put the heading calculation of work in progress per unit. Calculation of work in progress per unit. See, in this particular problem, that is problem number 2, they have not mentioned how much is the work in progress. That is, how much of percentage of completion is the work in progress. They have not mentioned anything. So when they haven't mentioned anything regarding work in progress, you should always assume 100% of material and 50% of labor and other expenses. That is overheads and other expenses we should assume as 50%, and material we should assume as 100%. So what are all the different material? First is raw material. So whatever the material is there, for that 100% you should take it as work in progress, because whenever you are starting a production, you will put all the material inside first, then only you will give the labor in order to produce the product. So in order to start a production, you should always require 100% of material. Then whatever the labor has been consumed, according to that we will calculate work in progress. When they haven't mentioned anything in the question regarding the percentage of completion, you should always take 100% of 100% of materials and 50% of labor and other overheads. So here raw material they have given. What is the cost per unit of raw material? 180 rupees. So below that, first one is raw material. Point number 1 is raw material. Within bracket 180 rupees into 100%. 180 rupees into 100%. Close the bracket. In the amount column, put 180 rupees. 180 rupees. So raw material is 180 rupees. And second one they have given is packing material. You should understand the concept here. That is, packing material will be required only when there is a finished good is available. That is, only when the production is over, you will purchase the packing material and use the packing material for packing the finished goods. So while the product is in work in progress, that is, when there is a work in progress, then you won't need any packing materials for such production. A packing material is required only when a finished goods is made available. That is, if a production is over, then only a packing material is required, so that you can pack the material of the finished goods. Okay, fine. So packing material is not required during work in progress. So in work in progress, you should not take into account the packing material. So packing material is 0. So you should not take packing material when you are calculating work in progress, because when the work is in progress, you won't require any packing material to pack the product. So next one is direct labor. For materials it is 100%, and for any other expenses it is 50%. So direct labor, how much is the per unit cost? 90 rupees. So below that, below raw material, it is direct labor. Direct labor within bracket 90 rupees into 50%. 90 rupees into 50%. Amount column 45 rupees. Amount column 45 rupees. And below that, direct expenses. Direct expenses within bracket, how much is the per unit cost? Rupees 30. So 30 within bracket 30 into 50%. 30 into 50%. Close the bracket. Amount column, put 15 rupees. And the last one is fixed overheads. Fixed overheads, open a bracket. How much is the fixed overhead cost per unit? 90. So 90 into 50%. 90 into 50%, close the bracket. Amount column 45 rupees. Amount column 45 rupees. Now total the amount column 180 plus 45 plus 15 plus 45. So 285. Amount column 285. Total it. So total is 285. In respect of that, work in progress per unit. In respect of the 285, put work in progress per unit. Work in progress per unit. Now come to the problem. Okay, below that current assets, capital A, below that capital A current assets, put raw materials. Raw materials. For raw materials in the calculation column, how much is the raw material? Total number of units is 4,800. In the calculation column, put 4,800 into how much is the material cost per unit? 180. In working note number 1, we have found that raw material cost per unit is 180 into how much is the days they have given raw material. For raw material, it is 30 days. So total number of days to be taken is 300 days. Out of that, raw material should be maintained for 30 days. So 4,800 into 180 into 30 divided by 300. So amount column put 86,400. 86,400. Raw material is to be maintained for 30 days. So 4,800 into 180 rupees into 30 divided by 300. Amount column 86,400. Okay, below that packing material. Below raw material, it is packing material. How many days they have given for packing material? 15 days. How much is the cost of packing material? 60 rupees. So in the calculation column, 4,800 units into 60 rupees per unit. Packing material cost is 60 rupees per unit into what they have given is 15 days. So 4,800 into 60 into 15 divided by 300. Amount column put 14,400. In respect of packing material, amount column 14,400. So we have finished packing material. And next what they have given is finished goods is 200 units. You should maintain 200 units as a closing stock. So how much is the finished cost per unit? Finished goods cost per unit we have found 450 rupees. Total cost per unit of finished goods is 450 rupees per unit. Below that packing material, put finished goods. Below that packing material, put finished goods. In respect of calculation, how many units? They have given it in units. Given the quantity in units. They have not given in days. They are given in units. So 200 units into how much is the cost per unit? 450. So in respect of amount column, 90,000. Finished goods is 90,000 rupees. And next is work in progress. How many days they have given? 7 days of quantity should be maintained for work in progress. What is the amount we calculated for work in progress? For work in progress, the amount is 285 rupees. So calculation of work in progress per unit is 285 rupees. So below that finished goods, put work in progress. Work in progress. In calculation column, 4,800 units into 285 rupees into 7 divided by 300. 4,800 into 285 into 7 divided by 300. Why the 7? Work in progress should be maintained for 7 days. So 7 divided by 300. In respect of amount column, 31,920. 31,920. 31,920. So next is Other particulars are given below. That is, credit sales represent 80% of total sales and dealers enjoy 30 working days credit and balance 20% are cash sales. So to calculate debtors, we need credit sales and how many days of credit. Credit sales is 80% of total sales and credit is for 30 days. So below that work in progress, put debtors. Debtors in calculation column, how many number of units? 4,800 units to be sold into selling price. See, for debtors, as I told in previous sum, for debtors you should always calculate selling price, and for finished goods you should always take total finished cost, that is total cost per unit, whereas for debtors you should take selling price per unit. So 4,800 into 600 rupees into 80%, because 80% is the credit sales, 80% into 30 divided by 300, 4,800 into 600 into 80%, 80 divided by 100 into 30 divided by 300. You will get 2,30,400. Amount column 2,30,400. Debtors is 2,30,400. And below that, below the debtors, cash and bank. Cash and bank. In calculation column, open a bracket, working note number 3. Mention working note number 3 and close the column, close the bracket. Working note number 3. And leave 4 lines gap. Below that, start. Now we'll see. Cash and bank, they have mentioned 12% of net working capital. So you should first find what is net working capital. On that 12% is cash requirement. So first you need what is net working capital. So for that we should calculate current liabilities. So below that cash and bank, leave 3 lines gap. Capital B. Below that capital B. After 3 lines, put capital B, current liabilities. Current liabilities. So what are current liabilities? Creditors and overhead payments. All those are current liabilities. First, what they have given for current liabilities? First is creditors for purchase of raw material. So creditors allow 21 working days credit for payment. So you are getting 21 working days to make bill payments for raw materials. So below that current liabilities, put creditors for purchase. Creditors for purchase of raw material. Creditors for purchase of raw material. In respect of calculation column, put 4,800 units into what is the raw material cost? 180 into how many number of days they have given? 21 working days. So into 21 divided by 300. 4,800 into 180 into 21 divided by 300. In respect of amount column, 60,480. 60,480. Below the creditors for purchase is creditors for packing material. Creditors for packing material. In respect of calculation column, put 4,800 for packing material, also 21 days. See, they have mentioned creditors allow 21 working days credit for payment. They have not told only raw material or only packing material. So we are assuming for both raw material and packing material, we are getting 21 working days of credit. So for below the creditors for purchases, creditors for packing material. And in calculation column, put 4,800 into how much is the packing material cost per unit? 60. So 4,800 into 60 into, we are getting 21 days of credit. So 21 divided by 300. 4,800 into 60 into 21 divided by 300. In respect of amount column, put 20,160. 20,160. So we have finished both materials, that is packing material and raw material. So below that, point number C. See point number C. Lag in payment of overheads and expenses are 15 working days. All the overheads and expenses are paid after 15 working days. See, they have given clearly that only overheads and expenses are paid after 15 working days. But labor, they have assumed that it has been paid on the same day. Morning they will work, evening they will pay. It is assumed in that way so that only expenses and overhead should be assumed for 15 working days of lag in payment. Point number C, they have clearly mentioned lag in payment of overheads and expenses are 15 working days. For overheads and expenses, it is 15 working days. And for direct labor, they have not mentioned any lag in payment. So it is assumed that it has been paid in the exact day. So there won't be any current liabilities for payment of direct labor. So only outstanding overheads and outstanding expenses will be there. So outstanding overheads. How much is the overhead, fixed overhead cost we have calculated? Fixed overhead cost which we calculated per unit is 90 rupees. So below that creditors for packing material, put outstanding overheads. Outstanding overheads. In calculation column, 4,800 into 90 rupees into how many days they have given credit? 15 working days. So into 15 divided by 300, you will get 21,600. In respect of amount column, 21,600. 4,800 units into 90 rupees per unit into 15 days divided by 300 days. You will get 21,600. Amount column 21,600. And next, last one is outstanding expenses. Here direct expenses is considered as outstanding expenses. So below that outstanding expenses, below the outstanding overhead, put outstanding expenses. In respect of calculation column, how much is the direct expenses we calculated? 15 rupees, 30 rupees. 600 into 5%, that is 30 rupees. So in respect of calculation column, 4,800 units into 30 rupees into total credit days is 15 working days. So 15 divided by 300. 15 divided by 300. 4,800 into 30 into 15 divided by 300. In respect of amount column, 7,200. Amount column put 7,200. Now total the current liabilities. Now we can get what is current liabilities. So 60,480 plus 20,160 plus 21,600 plus 7,200. So underline it. In the total, put 1,09,440. 1,09,440 in respect of that total. In respect of that 1,09,440, put total. That is total of current liabilities. Now below that total, put capital C. Capital C, net working capital. Capital C, net working capital. Open a bracket. Capital A minus capital B. Capital A minus capital B. Close the bracket. Now see, understand this properly. We have calculated from in current assets, raw material, packing material, finished goods, working progress and debtors. And we should calculate cash and bank. So now total the current assets excluding cash and bank. What is the current assets excluding cash and bank? Totally 86,400 plus 14,400 plus 90,000 plus 31,920 plus 2,30,400. So excluding cash and bank, what is the current assets is 4,53,120. Now we should calculate cash and bank. Now come to the working notes. Below that working note number 2, put working note number 3. Below that working progress per unit, that is note number 2, put working note number 3. Put the calculation of cash and bank balance. Calculation of cash and bank balance. First arrow mark. Let's assume net working capital as X. Let's assume net working capital as X. Second arrow mark. Therefore, cash and bank balance. See, if net working capital is X, cash and bank balance is 12% of X. They have given point number C, point number D. Cash requirements to be 12% of net working capital. Here we have assumed net working capital as X. Then what is cash and bank balance? 0.12x, because 12% of x is cash and bank balance. That is, they have clearly mentioned net working capital into 12% is the cash and bank balance. Here we assume that net working capital is x. So cash and bank balance is 12% into x. So 12 divided by 100 is equal to 0.12. So therefore cash and bank, second arrow mark, therefore cash and bank balance is 0.12x. 0.12x. So till that you have understood. That is, net working capital we assumed as x, and cash and bank balance is 12% of net working capital. So 0.12x is cash and bank balance. Now below that, third arrow mark, net working capital is equal to current assets minus current liabilities. Net working capital is equal to current assets minus current liabilities. That is the formula. Here what we have assumed, net working capital x. So x is equal to what is the net working capital excluding cash and bank balance? We found 4,53,120. That is summation of all the other current assets excluding cash and bank balances, 4,53,120, which we found. See, if we summarize all the current assets excluding cash and bank balance, that is all this 86,400, 14,400, 90,000, 31,920 and 2,30,400, will get 4,53,120. 4,53,120 plus what is the total current assets? 4,53,120 excluding cash and bank balance. And what is cash and bank balance? We have assumed 0.12x. So 4,53,120 plus 0.12x plus 0.12x, that is current assets. So within bracket current assets minus what is current liabilities, which we found. Current liabilities, total of current liabilities 1,09,440. 1,09,440. Now solve it. X, if this 0.12x goes to the other side, left hand side, it will be minus 0.12x. So 1 minus 0.12 is equal to 0.88x. So 0.88x is equal to what is 4,53,120 minus 1,09,440? It is 3,43,680. So 0.88x is equal to 3,43,680. 3,43,680. So 0.88x is equal to 3,43,680. And what is x? X is equal to 3,43,680 divided by 0.88. So below that, x is equal to 3,43,680. 3,43,680 divided by 0.88. So below that, x is equal to, take the calculator and calculate it. 3,43,680 divided by 0.88. You will get 3,90,545. So x is equal, below that x is equal to, therefore x is equal to 3,90,545. Therefore x is equal to 3,90,545. So x is net working capital. So we have found that answer of the problem, that is net working capital is 3,90,545. 3,90,545. Now we should calculate what is cash and bank balance. What they have given cash and bank balance? Cash and bank balance is 12% of net working capital. Here we found x, that is net working capital is 3,90,545. So on this 12% is cash and bank balance. So below that, fourth arrow mark, cash and bank balance is equal to 3,90,545. 3,90,545 into 12%, which is equal to 46,865. 46,865. So cash and bank balance we have found 46,865, and net working capital is 3,90,545. This is how we should calculate what is net working capital and cash and bank balance if they have given this point number D. So remember this point number D, this, and if this adjustment has been provided, you should calculate cash and bank balance and net working capital using this working note number 3. That is, point number 1 is we should assume net working capital as X, and point number 2 is how much percentage of net working capital is cash and bank balance. So on multiply X with that percentage, that is cash and bank balance. Substitute that in net working capital formula, that is current assets minus current liabilities. So you will get what is net working capital and what is cash and bank balance. So here we found net working capital as 3,90,545 and cash and bank balance is 46,865. So now come to the table. In respect of that cash and bank balance, in calculation you put working note number 3 within bracket. So in respect of amount 46,865. 46,865. Now total the entire amount column, that is current assets. Now total the entire current assets. Use the calculator and total it. You should use the calculator whenever we are calculating the answers, so that you will get that fast usage of calculator. You will get that speed. So total it. How much is the total amount? 4,99,985. 4,99,985. In respect of that total. In respect of that total, 4,99,985. So that is total current assets. So on the total current assets, if you reduce total current liabilities, you will get net working capital. So now what is total current assets? 4,99,985. 4,99,985 minus what is total current liabilities? 1,09,440. 1,09,440. So what is the total net working capital? In respect of net working capital, amount column put 3,90,545. 3,90,545. So this is problem number 2. This is how you should calculate net working capital if they have given this point number D adjustment. That is, if they have given cash and bank balance as a percentage of net working capital. So with this we have completed problem number 2. Okay, now we'll see problem number 3. See, this is very easy problem. Summation of first and second problem is third problem, where they are given directly the selling price. So we'll see the problem number 3 now. Problem number 3. S Limited provided the following data to you. Raw material cost per unit is 52, direct labor 19.5, overheads 39 rupees, total cost. Summation of this 52, 19.5 and 39, that is 110.5, that is total cost, and selling price is 130. So 130 minus 110.5 is 19.5. This is the cost and profit table. That is, usually we will calculate the profit per unit as working note, which they have given directly. So one working note has been reduced, which they have given directly in the question itself. So you should calculate only work in progress per unit. You no need to calculate you no need to calculate profit per unit, so that already finished goods cost and raw material cost are available. You should only calculate work in progress per unit. So below that, for the following additional information is available. Point number A, average raw material in stock 1 month. So raw material in stock they have given is 1 month. An average material in process, that is work in progress, is half a month. Half a month means 15 days. An average finished goods in stock is 1 month. So finished goods also 1 month. And credit allowed by suppliers is 1 month, which means creditors for raw material, that is creditors for purchases 1 month, whereas credit allowed to debtors is 2 months. Credit allowed to debtors is 2 months. And time lag in payment of wages is 1.5 weeks. 1.5 weeks, which means 1.5 week. And overhead is 1 month. Overhead is 1 month. And H, point number H, 1/4 of the sales are on cash basis, which means 3/4 of the sales are on credit basis. For calculating the credit allowed to debtors, point number H is important. That is 1/4 of the sales are on cash basis, which means 3/4 is on credit basis. And last is point number I. They have given directly that cash balance is expected to be 1,20,000. So they have not given it as a percentage of net working capital. They have given directly the cash balance is expected to be 1,20,000. So you are required to prepare a statement showing the working capital needed to finance a level of activity of 70,000 units of annual output. That is, they have given directly total annual output is per year. That is, annual output is 70,000 units. So annual production is 70,000 units. The production is carried out. The production is carried out throughout the year on even basis. That is, if we are calculating per month or 2 months or 3 months for this raw material finished goods, it has been the production has been done in even basis. That is, you can directly divide it by 52 or 30 days per month. So the production is carried out throughout the year on even basis, and wages and overheads accrue similarly. Calculation to be made on the basis of 30 days a month and 52 days a year. That is 52 weeks a year, 30 days a month, which means in 30 into 12, total days is 360. So if they are given in days, it means 360 days. If they are given in a month, it means 30 days, 30 days in a month, and in weeks means 52 weeks in a year. So this is how we should calculate the number of days to calculate the raw materials, work in progress and finished goods and other things. So with this problem number 3, we'll take down the solution. Simple man, like same like problem number 1 is problem number 3. But what they have given is they have directly given the working note number 1 in the question itself. So you should calculate the working note number 2 and you should start the problem. So put the heading solution. Put the heading problem number 3. Problem number 3, calculation of working capital requirement. Calculation of working capital requirement. Below that 3-columnar table. Below that 3-column table, first column particulars, second column calculation, and third column amount. Particulars, calculation and amount. Below that particulars, capital A. Below that particulars, capital A, current assets. Current assets. Now first we will calculate the work in progress per unit so that we can finish off the sum easily. So below that current assets, leave 10 lines gap. Below that current assets, leave 12 lines gap. 12 lines gap. Put working note number 1. Below that current assets, put 12 lines gap and put working note number 1. Put the heading calculation of work in progress per unit. Calculation of work in progress per unit. Below that 2-columnar table, particulars and amount. Below the 2-columnar table, particulars and amount. Below that particulars, see for work in progress what they have given, they haven't mentioned anything in respect of work in progress. So what we should assume, assumption should be always material 100% and labor and other overheads 50%. So below that particulars, put direct material. Direct material, how much is the raw material cost? They have given 52 rupees. So within bracket 52 into 100%. Within bracket 52 into 100%. In respect of amount column, rupees 52. In respect of amount column, rupees 52. And below that, below the direct material is direct labor. Put direct labor. How much is the direct labor? They have given 19.5. So open a bracket. So labor we should always take 50%. So 19.5 into 50%. 19.5 into 50%. Close the bracket. Amount column put 9.75. 9.75. And last one is overheads. Below that overheads. Open a bracket. How much is the overheads they have given? Fixed and variable put together is 39 rupees. So open a bracket 39 into 50%. Overheads also you should take only 50%. So open a bracket 39 into 50% and close the bracket 39 into 50%. In respect of amount column, put 19.5. 19.5. So only three costs are there. There is no other cost. So total it. Total the amount column. 52 plus 9.75 plus 19.5. Total amount put 81.25. 81.25. In respect of that 81.25, put work in progress per unit. In respect of that 18.25, put work in progress per unit. Now we have calculated work in progress per unit also. So it is very easy to complete the sum now. So below that, come to the solution. Below that current assets. Below that current assets, put stock of raw materials. Stock of raw materials. How much is the number of units? 70,000 units. And what is the raw material cost? 52. And what is the time period given? 1 month. So in respect of calculation column, 70,000 units into 52 rupees into 30 divided by 360 into 30 divided by 360. Why we are assuming 360? They have given calculations to be made on the basis of 30 days a month. A month 30 days means for 12 months it is 360 days. So if they have mentioned 1 month, then it is 30 divided by 360. If they have mentioned half a month, 15 divided by 360. So if whatever basis they have mentioned, on that basis only we should calculate. So here the in calculation column put 70,000 into 52 into 30 divided by 360. So amount column put 3,03,333. 3,03,333. Below that, stock of work in progress. So stock of work in progress. What is the work in progress per unit we have calculated? Work in progress per unit is 81.25. So in respect of that stock of work in progress, calculation column put 70,000 units into 81.25 into how much is the time period they have given? Half a month, which means 15 divided by 360. 70,000 into 81.25 into 15 divided by 360. In respect of amount column, put 2,36,979. 2,36,979. So below that, put stock of finished goods. Stock of finished goods. What is the time period they have given finished goods? 1 month. What is the finished goods cost? Total cost 110.5. So with this we can calculate what is stock of finished goods to be maintained. So in stock of finished goods, in respect of that calculation column, put 70,000 into 110.5. That is finished goods cost. 70,000 into 110.5 into how much is the finished goods time period? 1 month. So into 30 divided by 360. Into 30 divided by 360. 70,000 into 110.50 into 30 divided by 360. In respect of amount column, put 6,44,583. 6,44,583. So stock of finished goods is 6,44,583. And below that put debtors. Next current asset is debtors. They have given debtors. What is the credit allowed to debtors? 2 months. So in respect of calculation column, put 70,000 into how much is the credit sales? 3/4 of the sales is on credit basis because 1/4 is on cash basis. So 70,000 into 3 divided by 4 into what is the selling price? 130 into 130 into how many months? So 32 months. 30 divided by 360. Understand it. 70,000 is the total units and 130 rupees is the selling price per unit. So 70,000 into 130 into credit basis is 3/4. So into 3/4 into 2 months. So 60 divided by 360. In calculation column, put 70,000 into 130 into 3 divided by 4 into 60 divided by 360. So amount column 11,37,000. 1 second. 70,000 into 130 into 3 divided by 4 into 60 divided by 360. So 11,37,500. It is 2 months. Credit allowed to debtors is 2 months. So 60 divided by 360. So amount column 11,37,500. 11,37,500. So that is debtors value. So cash and bank balance. The last part of current asset is cash and bank balance, which in point number I they have given directly 1,20,000. So in current assets, the last is cash and cash balance. Cash balance in respect of amount, put 1,20,000. Put 1,20,000. Now total the current assets. 3,03,333 plus 2,36,979 plus 6,44,583 plus 11,37,500 plus 1,20,000. You will get 24,42,185. 24,42,185. Now total it properly. I am getting different answer, but in the notes it is different. Three lakh 3,333 plus 2,36,979 plus 6,44,583 plus 11,37,500 plus 1,20,000. Total amount is 2,42,395, not 185, it is 395. So she has made some mistake in calculations. Okay, you just total it properly and put the total as 3,42,000, 24,42,395, 3,03,333, 2,36,979 plus 6,44,583 plus 11,37,500 plus 1,20,000. So 24,42,395. 24,42,395. That is the total current assets. In respect of that total. In respect of that 24,42,395, put total. So below that capital B. Below that same statement, capital B. Below that, below the total capital B, current liabilities. Current liabilities. First is creditors. In respect of that current liabilities, put creditors. Below that creditors. How much is the days given for creditors? 1 month. So credit allowed by suppliers is 1 month. They are giving us time of 1 month. So what is the raw material cost? And that 1 month is time period which we are getting. So total 70 in respect of that calculation column, put 70,000 into raw material cost is 52. 70,000 into 52 into 30 divided by 360. 70,000 into 52 into 30 divided by 360. 3,03,333. Moon column put 3,03,333. Below that, outstanding wages. Outstanding wages. Wages, what they have given? Time lag in payment of wages 1.5 weeks, which means 1.5 weeks. Out of 52 weeks, time lag we are getting is 1.5 weeks. So we should calculate the direct labor, outstanding wages. So outstanding wages in respect of calculation column, put 70,000 into how much is the direct labor cost? 19.5. 70,000 into 19.5 into 1.5 divided by 52. 1.5 divided by 52. 70,000 into 19.5 into 1 point. 1 point. What is the direct labor cost? 19.5. So 70,000 into 19.5 into 1.5 divided by 52. You are getting 39,375. 39,375. Here she has mentioned 9.75, but that is 19.5. So 70,000 into 19.5 into 1.5 divided by 52. In the amount column, put 39,375. 39,375. Below that, outstanding overheads. Outstanding overheads. For overheads, the delay in payment is 1 month. So in respect of that outstanding overheads, put in calculation column 70,000 into what is the overhead cost? 39. 70,000 into 39 into 30 divided by 360. 70,000 into 39 into 30 divided by 360. Amount column put 2,27,500. 2,27,500. Now total the current liabilities. 3,03,333 plus 39,375 plus 2,27,500. 2,27,500. So the total is 5,70,208. Now total it 5,70,208. 5,70,208. Total of current liabilities. In respect of that 5,70,208, put total. Total. So below that, capital C. Below that, capital C, net working capital. Net working capital. Open a bracket, capital A minus capital B. Net working capital, capital A minus capital B, close the bracket. So what is net working capital here? Current assets is 24,42,395 minus current liabilities 5,70,208. You will get 18,71,887. You just leave this number because she has taken current assets wrongly. The total is wrong. But the net working capital answer is 18,71,887. 18,71,887. That is net working capital. With this, we have completed problem number 3. So next problem, that is problem number 4, is dealing with operating cycle, that is working capital cycle. So basically, what is this operating cycle? It is nothing but how much days it takes to rotate the funds. That is, in business terms, we call it as rotation. Suppose we invest a part of working capital in raw material, so that that raw material can be used for production. So some cash is being locked in raw material because of holding period. So in this way, how much of cash is locked in because of this operating cycle, and in how many days you can rotate the funds? That is what has been discussed in this operating cycle. So basically, this operating cycle is of 4 types, man. Like 4 different phases. That is, first you have cash in your packet. Like you have cash in your locker, and you are going to convert that cash into raw material. That is the first phase. That is the lead time. First, using the cash, you will purchase raw material. That is lead time. And second one is, you will convert that raw material into work in progress and then into finished goods. That is called production cycle. That is the second phase of operating cycle. And third cycle is selling the finished goods to customers. That is converting the conversion of finished goods into debtors through sales. You will sell the product so that the finished goods will be sent to the debtors. The value in finished goods will be converted into value of debtors. And the final stage is converting from debtors to cash. That is collection collection of money, that is average receivables. So this is the four phases. One is conversion of cash into raw material, then raw material into finished goods, then finished goods into debtors, and debtors into cash. That is the operating cycle, and how much days it takes to rotate these funds. The faster the funds being rotated, the good the business is. That is, how much faster you can rotate the funds. That is, if you are rotating it within 50 days, where previous year you rotated it within 80 days, then your business is doing well. So how much faster you can rotate the funds, the faster the funds rotate, the better it is to the firm. That is the basic concept. If you rotate it very faster, your returns will be high, so that your firm will do well, like your business will be doing well. So this is the operating cycle. So they have given only one problem in this concept, that is operating cycle. One problem is more than enough. It is very easy concept. So now we'll see what is this operating cycle and how to calculate this total number of days required to rotate this funds. So basically there are four types I told you, no? Raw material, work in progress, then finished goods and debtors. So how to rotate, and see, creditors, when we are putting in for debtors, money for debtors, that is from finished goods you are converting into debtors, and debtors for a month or for based on the company's policy, your funds are being locked with debtors for few months. In the same way, you are getting some benefits by keeping the cash with you of the raw material purchase. For raw material purchase, you should make payment to the creditors, but you are taking some lead time from them. So on that time, you can use that funds for these purposes. So that is a benefit. So any payment should be made to the creditors which you have time. So that is benefit for this operating cycle. Same way debtors, you should, if you are collecting debtors within short span of time, that is benefit for you. But if you are lagging your debtors period, then it is going to affect your business. So here we should calculate holding period for raw material, work in progress, finished goods, debtors and creditors, all the 5 points. So first, what they have given in the question is problem number 4. From the following data, compute the duration of the operating cycle for each of the years. That is year 1 and year 2. The data they have given is problem particulars year 1, year 2. Stock, closing stock they have given. For the year 1, you should always maintain 20,000. For year 2, 27,000. Work in progress 14,000, 18,000. Finished goods 21,000, 24,000. Purchases, you should always keep your purchases like this much, 96,000 and 1,35,000 a year. And cost of goods sold in a year is 1,40,000, 1,80,000. And sales in a year 1,60,000, 2,00,000. Debtors in a year 32,000, 50,000. Creditors 16,000, 18,000. These are the different data they are given. Using this, assume 360 days per year for computational purposes. For computational purposes, they are asking you to assume 360 days per year. So with this, we can calculate what is the operating cycle. So put the heading, come to the solution, come to the notes. Problem number 4. Problem number 4, calculation of operating cycle. Calculation of operating cycle. Below that, 4 columnar table. Below that, 4 columnar table. First column, particulars. First column, particulars. Second column, formula. Second column, formula. Third column, year 1. Third column, year 1. And fourth column, year 2. Particulars, formula, year 1 and year 2. So what you should do is, you should calculate the days required for rotating the funds of each raw material, work in progress, finished goods, debtors and creditors. For all 5, what you are going to calculate is how many days it is required to rotate the funds. How to calculate is, there is a formula to calculate this number of days, that we will see here now. Below that particulars, small a, below that particulars, small a, raw material holding period. Raw material holding period. In respect of that formula, put raw materials divided by purchases into 360. That is the formula. See, how will you calculate how many days it is been logged in? See, for a year, you need to purchase 96,000 of goods. That is raw materials. What they have given purchases 96,000. In that, raw material of 20,000 should always be available in stock. So 20,000 should always be there out of 96,000. So how many days? 75 days lead time. That is this 20,000 which you are keeping. Suppose in the year in March 31st, 2020, you will keep 20,000 rupees of worth of raw material. Okay, that 20,000 worth of raw material you can use it for next 75 days. Can you understand? This 20,000 worth of raw material you can use it for next 75 days for production, for smooth running of production. So what the company policy is there, what company has framed is next for 75 days raw material should be made available previously itself. That is, if today evening I close the stock, if I take count of stock, I should have raw material for production for next 75 days. So 75 days of raw material cost has been locked in the closing stock. That is what we are calculating in operating cycle. Simple. How much is the raw material cost to be maintained in stock divided by how much is the total purchases you are doing, total purchase of raw material you are doing in a year. So raw material divided by total purchases into, if they are giving in days, then into 360. If they are asking you in months, into 12. If they are asking in weeks, into 52. Whatever way they are asking, you should calculate. Now the year they asked us to assume 360 days. So stock of raw material is 20,000 divided by purchases is 96,000 into 360. So 74.99, which is for year 1 it is 75. You simply have to remember this formula. For raw material, it is raw material divided by purchases into time period. Raw material divided by purchases into time period. So if we calculate using this formula for year 1, it is 75 days. Whereas for year 2, 27,000 divided by 27,000 is the raw material and purchases 1,35,000 into 360. So 72 days. For year 2, it is 72 days. Simple. Raw material holding, how much of stock of raw material to be held. That's closing stock of raw material divided by total purchase of raw material into 360. Closing stock of raw material into 360 divided by total purchases. That is the formula for raw material holding period. Now below that, point number B, below that small b, work in progress holding period. Now we calculated raw material holding period. Now work in progress holding period. How will you calculate work in progress holding period? Work in progress holding period can be calculated using cost of goods sold. Okay, work in progress time period, that is work in progress days, can be calculated using stock cost of goods sold. So in respect of formula, put stock of work in progress divided by cost of goods sold into 360. Stock of work in progress divided by cost of goods sold into 360. Here work in progress is 14,000 divided by cost of goods sold is 1,40,000 into 360. So 36 days. In respect of year 1, put 36. In respect of year 1, 36 days. And for year 2, 18,000 divided by 1,80,000 into 360. It is also 36. So for year 2 also 36. For year 2 also 36. Next is small c. Small c, finished goods holding period. Finished goods holding period. So finished goods holding period is, see, always finished goods, for finished goods what you will take in previous sums and all what you are doing. For calculating the finished goods, you finished stock, you have been using cost of production. You didn't use selling price or you didn't use cost of goods sold. You used total cost of production for calculating the stock of finished goods. Whereas your cost of production they have not mentioned. So we are calculating cost of goods sold. So we are calculating the finished goods using cost of goods sold. So point number C, finished goods holding period. In respect of formula, stock of finished goods divided by cost of goods sold into 360. Cost of finished goods divided by cost of goods sold. Stock of finished goods divided by cost of goods sold into 360. So basically what we are doing in this problem is we are reverse working. Normally in every sum they will give the number of days. We should calculate the stock value to be maintained, closing stock value to be maintained. Whereas here they have given stock value and they have given purchase value. So we should calculate the days. This is reverse working of the previous sum. So here finished goods holding period formula is stock of finished goods divided by cost of goods sold into 360. Here finished goods value is 21,000 and cost of goods sold is 140, 1,40,000. 21,000 divided by 1,40,000 into 360. So for year 1 it is 54 days. For year 1, in respect of year 1 put 54. And in respect of year 2, 24,000 divided by 1,80,000 into 360. That is 48 days. In respect of year 2, 48 days. So next is point number D. Point number D, debtors holding period. Debtors holding period. How will you calculate debtors holding period? Normally in the previous problem, what you will do to calculate the debtors? You will take selling price. Okay, so we should take sales value here. Normally for debtors calculation, we will handle with selling price, which means sales value. So here we should use sales value. Debtors divided by sales into 360. So in respect of formula, put debtors divided by sales into 360. Debtors divided by sales into 360. So what is the debtors they have given? 32,000 divided by 1,60,000 into 360. So 72 days. In respect of year 1, put 72 days. And in respect of year 2, 50,000 divided by 2 lakh, 50,000 divided by 2 lakh into 360. So 90 days. In respect of year 2, put 90 days. In respect of year 2, 90 days. See, for all these four formulas, all these four things A, B, C, D, that is raw material, work in progress, finished goods and debtors. We have did the same thing what we do in previous sum. But one reverse working what we are doing is, there we will calculate the closing stock. But here they have already mentioned the closing stock. So we should, using this stock, we should calculate the number of days. But in previous sum, they used to give all the number of days or months. Whereas here, they didn't give days, they gave closing stock value. Using that closing stock value, we are reverse working and calculating the number of days. That's all. You just have to remember these formulas so that you can easily calculate the operating cycle. So till point number D, it is current assets. So it is all positive. Whereas creditors is negative thing. So point number E. Point number E. Creditors is current liabilities. So you should deduct it. So less, point number E, less creditors. Less, underline it, creditors. Holding period. Less, underline it, creditors holding period. For creditors, what you will normally use? For creditors, we will always use purchase value of raw material. So here creditors divided by purchases into 360. Here creditors is 16,000. In respect of formula, put creditors divided by purchase into 360. Creditors divided by purchase into 360. So what is creditors? 16,000. Purchase is 96,000. So 16,000 divided by 96,000 into 360, which is 60 days. So within bracket put 60 days. Within bracket put 60 days. And next one is 18,000. Creditors is 18,000 divided by purchases is 1,35,000 into 360. Within bracket put 48 days. Within bracket put 48 days. So now total it. A plus B plus C plus D minus E. Total it 75 plus 36 plus 54 plus 72 minus 60. In respect of year 1, put 177. In respect of year 1, put 177 days. And year 2, now total it 72 plus 36 plus 48 plus 90 minus 48. In respect of year 2, put 198. 198. So here we can find one thing, that is for year 1, it took 177 days to rotate the funds, whereas for year 2 it took 198 days to rotate the funds. which means the business is not doing well. Previous year it has made 177 days itself, it has rotated all the funds, whereas for year 2 it took 198 days, extra 21 days to rotate the funds. So the business is not doing well. So below that record comment, below that comment, underline it. Operating cycle increases. Operating cycle increased from 177 days to 198 days. 177 days to 198 days in the second year. Operating cycle increased from 177 days to 198 days in the second year, comma, which will show adverse effect on the working capital of the entity, which will show adverse effect on the working capital of the entity. See, if the days are increasing, then it will show negative balance in working capital. That is, you should maintain extra working capital balance if the days are increasing. So that is what has been to be written as comment. For every problem, it is important to write comment. So this is operating cycle. For this, if you have been asked with the exam, this operating cycle problem, you just have to remember this formulas. For raw material, it is raw material stock divided by purchases into days. Whereas for work in progress stock divided by cost of goods sold into days. Whereas finished goods stock divided by cost of. Instead of cost of goods sold, if they have given cost of production, you should take cost of production. So stock of finished goods divided by cost of production into 360. Debtors holding period is always debtors divided by sales, whereas creditors holding period is creditors divided by purchases. Debtors divided by sales into number of days, creditors divided by purchase into number of days. These 5 formulas you should remember for this operating cycle. So with this we have completed problem number 4. Problem number 4. So now come to problem number 9. This is also an important concept which they might ask you in MCQs. What is the method 1, method 2? They'll ask you. Very easy concept. So here what they are asking in the problem number 9 is they are asking us to understand Tandon committee and answer the question based on Tandon committee. So first we should have basic knowledge on Tandon committee. So while taking theory itself, I have explained you the Tandon committee, but we'll see it one more time. What is this Tandon committee? Take page number 148. Page number 148. 6.4. That is maximum permissible bank finance Tandon committee. This is the 3 formulas for calculating the amount of loan that can be given as working capital loan to any company or any corporate structure. This is called as Tandon committee. The Tandon committee has set up 3 methods of calculating the maximum loan that can be allowed as working capital loan. Suppose the bank is I'm doing a business and bank is giving me a working capital loan. My working capital loan will be allowed for a certain limit based on this Tandon committee, based on this maximum permissible bank finance that is mentioned by Tandon committee. So what are these 3 different methods of calculating the maximum permissible bank finance towards working capital loan? Method 1, 75% of current assets minus current liabilities. You should just calculate what is current assets minus current liabilities on that 75%. That is method 1. And method 2 is 75% of current assets minus current liabilities. You should calculate 75% into current assets on that reduce current liabilities. And method 3 is 75% of total current assets minus core current assets. What is this core current assets is? They will mention it is in the problem itself. Suppose they are giving you a problem, in that below itself as adjustment they will give you what is core current assets value. So whatever is the total current assets, on that reduce the core current assets, on that 75% minus current liabilities. These are the three methods of calculating maximum permissible bank finance towards working capital loan as mentioned by the Tandon committee. Okay, now come to problem number 9. Problem number 9. Compute the maximum bank borrowings permissible under method 1, 2, 3 of Tandon committee norms from the following figures and comment on each method. So what they are asking us to calculate what is the maximum permissible bank finance for working capital based on the balance sheet which they have given. So now we should calculate all three methods. Using all three methods, we should calculate the maximum permissible bank finance. So it is very easy. Now put the heading. Put the heading. Here they have given total current assets as 740. It includes raw material, work in progress, finished goods, receivables including bills discounted with the bankers, that is debtors and other current assets, which is 740. And current liabilities is creditors for purchase and other current liabilities, which is 300, and bank borrowings including the bills discounted with the bankers, that is 400. Bank borrowings means what? It is already permitted loan, that is 400. But we should calculate how much is allowable and how much should be disallowed from this 400. That is what they are asking. See, 300 is the current liabilities and 740 is the current assets. Okay. And see, as I told, assume core current assets are 190 lakhs. So they are given what is core current assets. So from this we can calculate what are the three permissible bank finance under three methods. So current assets is 740 and current liabilities is 300 and already allowed bank loan is 400 and core current assets is 190. So this is the data they have given in the balance sheet. Using this, we should calculate the maximum permissible bank finance. Now take the notes. Problem number 9. Problem number 9. Put the heading Tandon committee. Tandon committee. Underline it. Below that, small Roman number 1. Below that, small Roman number 1. Method 1. Method 1. What is method 1? 75% of current assets minus current liabilities. So below that method 1, put arrow mark maximum permissible bank finance. Maximum permissible bank finance is equal to maximum permissible bank finance is equal to, write the formula. Open a bracket, current assets minus current liabilities. Current assets minus current liabilities, close the bracket, into 0.75, that is 75%. Current assets minus current liabilities within the bracket into 0.75. Now calculate it. What is current assets? Current assets they have mentioned as 740. So current assets is 740. Open a bracket, 740 minus current liabilities is 300. So close the bracket. Open the bracket, 740 minus 300 and close the bracket into 0.75. So now calculate the answer. 740 minus 300 into 0.75 is equal to 330. Below that is equal to 330 lakhs. Just mention 330. So maximum permissible bank finance as per method 1 is 330 lakhs. Okay, but what already bank has provided is 400 lakhs. Without following the Tandon committee, they have already given working capital loan of 400 lakhs. But maximum permissible loan as per method 1 is only 330 lakhs. So 400 minus 330 lakhs is equal to 70 lakhs. So rupees 70 lakhs should be converted from working capital loan to long-term loan. Simple. Can you understand now? Tandon committee is setting up three methods. Okay. Under the three methods only you can give loan, that is working capital loan. Above that you can't give any working capital loan to any company. So under method 1, the maximum permissible bank finance is only 330 lakhs, whereas bank has already given 400 lakhs of working capital loan. So Out of that 400 lakhs, 330 can be allowed. Remaining 70 lakhs should be disallowed and it should be converted into long-term loan. It should not be kept as working capital loan. So below that comment, record it. Rupees 70 lakhs should be reclassified as a long-term loan. Should be reclassified as a long-term loan. So this is method number 1. So below that, Roman number 2, small Roman number 2, in respect of that method 2. Below that, put an arrow mark, maximum permissible bank finance. What is the formula? Current assets into 0.75, within bracket current assets into 0.75 minus current liabilities. That is the formula for method 2. So in respect of that maximum permissible bank finance is equal to, open a bracket, current assets into 0.75, close the bracket, minus current liabilities. Below that, take the numbers, is equal to, open a bracket, 740 into 0.75, close the bracket, minus 300. 740 into 0.75 within bracket minus 300 is equal to, what is the answer? 255 lakhs. 255. So under method 2, the maximum permissible loan is only 255 lakhs, whereas they have already given 400 lakhs. So 400 minus 255, that is 145 lakhs should be disallowed and it should be converted as long-term loan. Under method 2, only 255 lakhs can be provided as working capital loan, but they have already provided 400 lakhs. So 400 minus 255, that is rupees 145 lakhs should be converted into long-term loan. Below the 255, record comment. Rupees 145 lakhs should be reclassified as a long-term loan. And next is, below that, small Roman number 3. Method 3. In respect of that small Roman number 3, method 3. Below that, first arrow mark, maximum permissible bank finance. Is equal to, what is the formula for method 3? Current assets minus core current assets into 0.75 minus current liabilities. Okay, so open a bracket, again open a small bracket, current assets minus core current assets. Open a bracket and again open a small bracket, in that current assets minus core current assets. Now close the small bracket, into 0.75. Now close the bracket, into 0.75 and close the bracket, minus current liabilities. This is the formula for method 3. Method 3 is, first you should calculate current assets minus core current assets. On that 75% you should take. From that value you should reduce the current liabilities. So below that, open a bracket, then open a small bracket. What is current assets here? 740 minus what is core current assets? 190. 740 minus 190, close the small bracket, into 0.75. Now close the bracket, minus what is current liabilities? 300. So 740 minus 190 into 0.75, that is 412.5, 412.5 minus 300. So below that is equal to 112.5. Below that is equal to 112.5 lakh. So the maximum permissible working capital loan allowable, that is maximum permissible working capital loan is 112 lakh, 112.5 lakh, but they have already allowed 400 lakhs. So 400 minus 112.5, that is 287.5 lakh should be converted from working capital loan to long-term loan. That is, it should be reclassified as a long-term loan. 287.5 lakh should be reclassified as a long-term loan. So below that, record comment. Rupees 287.5 lakh, rupees 287.5 lakh should be reclassified as long-term loan. Should be reclassified as long-term loan. Now we'll see problem number 5. With that, we have finished the tandem committee. We have finished two new concepts, that is operating cycle and tandem committee. So right now we have finished all the different concepts of working capital. Now we are going to see the sums which are based on all those concepts which we already covered. So there are three concepts in this working capital management, that is, one is calculation of net working capital, two is operating cycle, and the third one is this tandem committee. So now we'll see the problem number 5, which is also similar to problem number 1, 2. That is, we should calculate the requirement of working capital. Actually, this is a recent exam question which has been added in the material. That is problem number 5. From the following details, prepare an estimate of the requirement of working capital. We should calculate the requirement of working capital. They have given production 60,000 units annually. They have not mentioned it is for per month. So for annually, it is 60,000 units. Selling price per unit is rupees 5. And raw material is 60% of selling price. Suppose selling price is 5 means on that 60%, that is rupees 3 is raw material cost. Direct wages is 10% of selling price. Overheads is 20% of selling price. So we can calculate this per unit cost using this selling price and percentage of selling price. And what they have given is materials in hand. Raw material stock should be 2 months requirement. Production time, that is work in progress, is 1 month. Finished goods is 3 months. Credit for material, that is credit for creditors, it is 2 months. Credit allowed to customers, that is debtors, it is 3 months. And average cash balance required is 20,000. Simple, as simple as that. They have given it on the face itself. What are all the basic data which are required to calculate the net working capital. So using this, we should calculate net working capital. Below that, they have given an adjustment. Wages and overheads are paid at the beginning of the month following. See, understand this. Wages and overheads are paid at the beginning of the month following, which means 1 month gap. Which means, suppose in April, if they are working, we are going to pay that for that April month in the May. That is what they have mentioned it as adjustment. Suppose in exam, if you go and check, this is actually a recent exam problem which they asked, but we were like, students will get confused whether to take 1 month or to not to take any month, because at the end of the month they are paying like that. They have not mentioned it is paid at the end of the month. They are mentioning it is paid at the beginning of the month following. That is, for if you are working, if you are worked on April 1st, salary for that April 1st will be given on May 1st. So it is 1 month. So we should understand this adjustment. Wages and overheads are paid at the beginning of the following month. If for April, it will be paid at May. For May, it will be paid at June. So for wages and overheads, time period is 1 month. And in production, all the required materials are charged in the initial stage, and wages and overheads accrued evenly. That is only our assumption for all the problem, which they have given it in the question itself. Which means for work in progress, in production means work in progress, all the required materials are charged in the initial stage. That is 100% of the material required for that production will be taken in the material initial stage itself. That is, when they are starting the production itself, 100% of the material will be given, and wages and overheads will be accruing evenly, which means only 50% will be taken evenly itself. we should take it as 50%. Half will be done and half will be in the future, which means 50% of wages and overhead should be included in the work in progress, and remaining 50% will be after the commencement of production. So for calculating the work in progress, as already we are taking the sum, same thing we should take here. Material 100%, wages and overheads 50%. So this is the problem number 5. This is exam. This is how they will ask the exam question. Something they will twist in that in question paper. They have twisted this: wages and overheads are paid at the beginning of the following month, for which students will get confused. That is, whether we should take it 1 month or whether they are paying it then and there. It is 1 month. We should take it as 1/12. Okay. Now we'll see the answer solution. Put the heading. Problem number 5. Problem number 5. Statement number 1. Calculation of net working capital requirement. Please bear with this handwriting. Calculation of net working capital requirement. Calculation of net working capital requirement. Below that 3 columnar table. Below the 3 columnar table, first column particulars. First column particulars. Second column calculation. Second column calculation. Third column amount. Particulars, calculation and amount. Particulars, calculation and amount. Below that particulars, capital A, current assets. Capital A, current assets. Below that, leave 8 lines gap or leave 10 lines gap. Below that, leave 10 lines gap. Put working note number 1. Working note number 1. Working note number 1. Calculation of profit per unit. Calculation of profit per unit. Profit per unit. Below that 3 columnar table, particulars, amount and amount. Particulars, amount and amount. Below that particulars, capital. Below that particulars, A, small a. Below that particulars, small a, selling price per unit. Below that particular small a, selling price per unit. Outer amount column, what is the selling price per unit? ₹5. So outer amount column, put ₹5. Small a, selling price per unit. Outer amount column, ₹5. Below that small b. Below that small b, total cost per unit. Total cost per unit. Underline it. Total cost per unit. Underline it. Below that total cost per unit, put raw material. Raw material. Open a bracket. How much is the raw material cost? 60% of selling price. Open a bracket. 5 into 60%. 5 into 60%. Close the bracket. Inner amount column, put ₹3. Inner amount column, put ₹3. Below that, direct wages. Below that, direct wages. Open a bracket. How much is the direct wages? 10% of selling price. Open a bracket. 5 into 10%. Now close the bracket. 5 into 10%. Close the bracket. Inner amount column, put 0.5. How much is 5 into 10%? It is 0.5. Inner amount column 0.5. Below that direct wages, put overheads. Below that direct wages, put overheads. Open a bracket. How much is the overheads? 20% of selling price. So 5 into 20%. 5 into 20%. Close the bracket. Inner amount column, put 1. How much is 5 into 20%? ₹1. So inner amount column, put ₹1. Now total the inner column. Total the inner column. Outer column, put 4.5. How much is the total? 3 plus 0.5 plus 1, which is 4.5. Outer amount column, put 4.5. Within bracket 4.5. So below that, now total it. 5 minus 4.5. 5 minus 4.5 is equal to 0.5. 0.5. In respect of that 0.5, what is that 0.5? It is profit. So profit per unit. So the 0.5 is the profit per unit. So selling price is 5 and total cost is 4.5. So profit is 0.5. So with this we have calculated what is total finished goods, so cost of finished goods, and what is the cost of raw material. Now one thing left, that is we should calculate cost of work in progress. Now working note number 2. Below that, working note number 2. Working note number 2. Calculation of work in progress per unit. Calculation of work in progress per unit. Calculation of work in progress per unit. Below the 2 columnar table, first column particulars, second column amount. Particulars, amount. Below that particulars, now take down small a. What they have told in the question itself, for work in progress, that is in production, all the required materials are charged in the initial stage, that is 100% of the material, and wages and overheads are accrued evenly, that is 50% of wages and overheads. So below that particular, small a, material, small a, raw material, small a, raw material, open the bracket. How much is the raw material cost? Rupees 3. We have found that raw material cost is rupees 3. So 3 into 100%. In respect of raw material, open a bracket, 3 into 100%. 3 into 100%. Now close the bracket. Amount column, put rupees 3. Amount column, put rupees 3. Below that, small b. Small b. Wages. Small b, direct wages. How much is the direct wages which we found? 0.5. So open a bracket. In respect of the wages, open a bracket, 0.5 into 50%. 0.5 into 50%. Now close the bracket. How much is 0.5 into 50%? Amount column, put 0.25. Amount column, put 0.25. Now below that, put point number C. Point number C, overheads. Point number C, overheads. Open a bracket. How much is the overhead value which we calculated per unit? 1. Overheads per unit is rupees 1. So 1 into 50%. Now close the bracket. In respect of that overheads, open a bracket, 1 into 50% and close the bracket. So how much you are getting? 1 into 50% is 0.5. So in respect of overheads, in amount column, put 0.5. Now total the amount column, 3 plus 0.25 plus 0.5. So total is 3.75. Now total is 3.75. In respect of the 3.75, put work in progress per unit. Work in progress per unit. So we have calculated what is value of work in progress per unit, that is 3.75. What is the total cost per unit, that is 4.5. What is the raw material cost per unit, that is rupees 3. With this, we can calculate net working capital. Now come to the problem, current assets. Below that current assets, put stock of raw material. Below that current assets is stock of raw material. In calculation column, how many units? Total units 60,000. So in calculation column, 60,000 into how much is the raw material cost which we found? 3 rupees into how much is the materials in and raw material requirement? 2 months. So 2 divided by 12. In calculation column, put 60,000 into 3 rupees into 2 divided by 12. So amount column, put 30,000. Amount column, put 30,000. And below that, stock of raw material, put stock of work in progress. Stock of work in progress. So open a bracket. How much is the quantity? 60,000 units into what is the work in progress value which we found? 3.75. So 60,000 into 3.75 into production time. See point number G. What is production time? 1 month. So 1 divided by 12. 60,000 into 3.75 into 1 divided by 12. Amount column, put 18,750. Amount column, put 18,750. And below that, stock of finished goods. Below that, stock of finished goods. In calculation column, put 60,000 into what is the cost of finished goods we found? 4.5. So 60,000 into 4.5 into see point number H. Finished goods in stores is 3 months. So 60,000 into 4.5 into 3 divided by 12, which is 67,500. 67,500. 67,500. Now below that, debtors. Debtors. How much is the debtors time they have given? Credit allowed to customers is 3 months. So debtors can be calculated using selling price, that is sales value. So debtors in respect of calculation column, 60,000 into what is the selling price? 5. 60,000 into 5 into 3 divided by 12. 60,000 into 5 into 3 divided by 12. In respect of amount column, put 75,000. Put 75,000. Below the debtors, now record cash balance. How much is the average cash balance required? 20,000. Below the debtors cash balance, in respect of amount, put 20,000. In respect of amount, put 20,000. Now total the current assets. 30,000 plus 18,750 plus 67,500 plus 75,000 plus 20,000. So total it 2,11,250. 2,11,250. In respect of that, put total. In respect of the 2,11,250, put total. In respect of current assets, that is 2,11,250, put total. Now below that, put capital B. Below that, put capital B, current liabilities. Current liabilities. In current liabilities, put creditors for raw material. Creditors for raw material. How much is the period allowed by the suppliers? Credit for material allowed is 2 months. Okay. What is the raw material cost per unit? 3 rupees. So in respect of the creditors for material, in calculation column, put 60,000 into 3 into 2 months. 2 months divided by 12 months. That is 30,000. In respect of amount, put 30,000. 60,000 into 3 into 2 divided by 12. So amount column, put 30,000. Below that, outstanding wages. Below that, outstanding wages. What is the wage cost? Where the direct cost, direct wages cost 0.5 rupees. So the time allowed is 1 month, because they are given as wages and overheads are paid at the beginning of the following month. That is beginning of the month following. For April month, they'll pay in May. For May month, they'll pay in June. So this way, if we calculate, it is 1 month of time period. So outstanding wages, in respect of calculation column, put 60,000 into 0.5 into 1 divided by 12. 1 divided by 12. Amount column, put 2,500. Amount column, put 2,500. Below that, outstanding wages. Outstanding overheads. Outstanding overheads. How much is the overhead cost? We calculated overheads is 1 rupee per unit. Overhead cost is 1 rupee per unit. So in respect of that outstanding overheads, in calculation column, put 60,000 into 1 into, for overheads also it is 1 month. So 1 divided by 12. 60,000 into 1 divided by 12. Amount column, put 5,000. Amount column, put 5,000. Now total the current liabilities. 30,000 plus 2,500 plus 5,000. So total it 37,500. 37,500. In respect of the 37,500, put total. Put total. So total current assets is 2,11,250 and total current liabilities is 37,500. Below that, put capital C. Below the total, put capital C. Net working capital requirement. Capital C. Net working capital required. Open a bracket. Capital A minus capital B. Capital A minus capital B. Net working capital required. Capital A minus capital B. How much is capital A? 2,11,250 minus how much is capital B? 37,500. So in respect of amount column, put 1,73,750. 1,73,000. Once again, 2,11,250 minus 37,500. So 1,73,750. 1,73,750. Net working capital required is 1,73,750. Now we'll see the next problem, that is problem number 7. We'll see problem number 7. Okay, problem number 7. There is a new concept that has been added in this same net working capital requirement. That is, we should calculate net working capital requirement only, how we are doing it in the previous sums. But for calculating the net working capital required, we should add some safety margin to that net working capital requirement. That is what a new additional adjustment which has been given in this problem number 7. So we'll see this problem number 7. Sandhya Limited sells goods in domestic market at a gross profit of 25%. That is gross profit of 25%, not counting on depreciation as a part of cost of goods sold. See, if suppose cost of production is 100, then gross profit is 25%. 25% on that cost. So Sandhya Limited sells goods in domestic market at a gross profit of 25%, not counting on depreciation. It is not counting its depreciation as part of cost of goods sold. Its estimates for next year are as follows. Okay, sales home. They are doing sales in both domestic market and export market. So how much is the net working capital required? That is what has been asked in the question. So sales home at 1 month credit. That is, for debtors it has been allowed for 1 month, 1,200 lakhs. Export at 3 months credit. For export alone, they are giving 3 months credit because for exports they will gain some export incentives and all. So they are giving 3 months credit. Selling price 10% below the home price. That is, if suppose home price is 100, then selling prices for this export is 90. So 540 lakhs. For 540 lakhs is the total export value. Then materials used 450 lakhs and suppliers extended 2 months credit. That is, creditors are allowing us 2 months credit for bill payments, and materials, raw materials used is 450 lakhs total value, and wages paid 360 lakhs and half a month in arrears. That is 15 days. For lag in payment of wages is 15 days. Then manufacturing expenses paid in 1 month in arrears. That is, manufacturing expenses, all the expenses related to manufacturing is paid 1 month in arrears, 540 lakhs. Administrative expenses paid 1 month in arrears, 120 lakhs. Sales promotion expenses payable quarterly in advance. Okay, always this advance means that is current asset. You are going to pay it in advance. That is, you are already holding it as an asset. You have already paid for future sales promotion expenses. So it is a part of current assets. Then income tax payable in 4 installments, of which one falls in the next financial year. That is 150 lakhs. So the company keeps 1 month of stock of each of raw material. That is, for raw material, closing stock should be 1 month should be maintained, and finished goods and believes in keeping 20 lakhs in cash. That is, raw material and finished goods you should keep 1 month of closing stock, and cash to be maintained is 20 lakhs. Assuming a 15% safety margin, that is, on the net working capital which we are finding using this current asset minus current liabilities, we should add 15% safety margin so that actual net working capital to be maintained, that we can get by adding this safety margin. Ascertain the estimated working capital requirement of the company. Ignore work in progress. So one good thing which has happened in this problem is there is no requirement of work in progress. So we can calculate only raw material and finished goods stock. So, and 2 points they have newly added, 2 to 3 points. Point number 1, sales promotion expenses payable quarterly in advance. That is, you are paying 3 months value in advance. So when you are paying in arrears, it is current liabilities. When you are paying in advance, it is current assets. So sales promotion expenses should fall under current assets. 1. Point number 2, income tax payable in 4 installments, of which 1 falls in next financial year. See, if you have studied DT, you know one concept. Income tax is always paid on profits. So only after earning profits, from that profits, a portion of profits has been paid to the income tax department as income tax. So income tax doesn't fall under net working capital. That is, income tax won't fall under any current assets or current liabilities. If suppose you have paid income tax, advance tax, then it is going to fall under deferred tax asset or deferred tax liability. So it doesn't fall under current assets or current liabilities. So whenever you see income tax entry in this working capital, just ignore that entry. That is point number 2. And point number 3 is safety margin. 50% of safety margin should be added. So whatever net working capital which you are getting, on that 50% should be added. So to calculate the net working capital required including safety margin. So what they are asking in the problem is they are asking net working capital including the safety margin. Whatever the net working capital you are getting from calculating current assets minus current liabilities, on that you should add 15%. So these are the 3 new points which has been included in this problem number 7. So now we'll take down the problem. We'll note the solution. Come to the notes. Problem number 7. Problem number 7. Statement number 1. Calculation of problem number 7. Statement number 1. Calculation of working capital requirement. Calculation of working capital requirement. 3 columnar table. Below that 3 columnar table. First column particulars, second column calculation, and third column amount. Particulars, calculation, and amount. Under particulars, capital A, current assets. In this you don't have to calculate any working notes because they have already calculated all the working notes. They have given it in the direct amount itself. So what you just have to do is you should calculate the value of the current assets and current liabilities. That's all. So below that current assets, first put debtors for domestic sales. Debtors for domestic sales. See, here in point number 1 they have given sales at home at 1 month credit. So 1200 you are giving on 1 month credit. So debtors for home sales is, domestic sales is 1200 into 1 divided by 12. That is 100. So debtors for domestic sales, in respect of calculation column, put 1200 into 1 by 12. 1200 into 1 by 12. Amount column put 100. Amount column put 100. Below that put debtors for export sales. Debtors for export sales. Calculation column, see, exports at 3 months credit. For sales, they are giving at 1 month credit. For exports, they are giving 3 months credit. Because exports, when we do exports, we'll get some export incentives. And the thing is, we can even claim some ITC on that. Like when we are making any exports, any GST paid on that can be claimed as ITC. So there are so many benefits for this exports. You will know it in the customs. When you are doing GST and customs, when you are studying customs, you will know the benefits of doing exports. Actually, in final, we'll read about export import. I think so. Yeah, in final only export import. We'll read about this. What is it? Foreign trade policy. Okay, something. Now we'll see this debtors for export sales. Debtors for export sales. How much is the export sales? 540. 540 on the 3 months credit. So 540 into 3 divided by 12. In calculation column, 540 into 3 divided by 12. Amount column put 135. Amount column put 135. Next, below that, prepaid sales promotion expenses. See, simple. If you are lagging your payments, it will fall under current liabilities because we are seeing so many sums. If you are lagging your payments, it will fall under current liabilities. But if you are making advance payment, it is falling under current assets. Simple as that. If you are lagging your payments and paying your wages, paying your manufacturing expenses, paying your promotion expenses in arrears, then it will fall under current liabilities. Whereas if you are making any advance payment, it will fall under current assets. Now, see here, sales promotion expenses payable quarterly in advance. For future, you are paying in the before itself. So here it is paid in advance, so it will fall under current assets. So record prepaid sales promotion expenses. Prepaid sales promotion expenses. How much is the total value? 60 lakhs. Sales promotion expenses payable quarterly. So 3 divided by 12. So 60 into 3 divided by 12. Amount column put 15. Amount column put 15. Now next, below that, stock of raw material. How much stock of raw material to be maintained? Below the prepaid sales promotion expenses, put stock of raw material. Stock of raw material. So material use, they have given is material use, suppliers extended 2 months credit. And raw material to be maintained. The company keeps 1 month stock of each raw material and finished goods. So raw material and finished goods, both 1 month of stock should be kept in the closing stock. So here total material use is 450. So in calculation column, 450 into 1 divided by 12. 450 into 1 divided by 12, that is 37.5. That is 37.5. Next, in amount column put 37.5. Below that, stock of finished goods. Below that, stock of finished goods. So what is the value of finished goods? All the cost included, or the total summation of all the cost is called value of finished goods. So cost of finished goods, we should add all the material cost. So material is 450, wages is 360, manufacturing expenses 540, administrative expenses 120. So cost of finished goods is 1470. We should not add sales promotion expenses here because sales promotion expenses is form part of selling cost of goods sold. It doesn't form part of cost of production. So the value of cost of production includes only cost of material cost, labor cost, then administrative expenses and manufacturing expenses. It won't include any labor, it won't include any sales promotion expenses. So the total cost of production is 1470. So in calculation column, put 1470 into how much is the closing stock to be maintained? 1 month. 1 divided by 12. So it is 122.5. Amount column put 122.5. Amount column put 122.5. So with this we have completed stock of finished goods. Below that, how much is the cash and bank balance to be maintained? That is 20 lakhs. So below that put cash and bank balance. Below that put cash and bank balance. Amount column put 20. Amount column 20. So total the current assets. How much is the total? 430. Now total it put 430. In respect of that, put total. In respect of that 430, put total. Now below that, put capital B. Capital B, current liabilities. current liabilities. Below that current liabilities, creditors for purchase. Creditors for purchase. How much is the time given by the creditors? Suppliers extended 2 months credit. In respect of the creditors for purchase, in calculation column, 450 into 2 by 12. 450 into 2 divided by 12. Because they are giving 2 months time for making the bill payments. So 450 into 2 by 12, that is amount column put 75. Amount column put 75. Below that, outstanding wages. Below that, outstanding wages. Wages paid half a month in arrears, that is 360 lakhs. Half a month means 0.5 divided by 12. So outstanding wages in respect of calculation column put 360 into 0.5 by 12. Outstanding wages 360 into 0.5 divided by 12. In respect of amount column put 15 lakhs. In respect of amount column put 15. Below that, administrative expenses over outstanding. Administrative expenses paid 1 month in arrears. Administrative expenses paid 1 month in arrears, which is 120 lakhs. So 120 into 1 by 12. 120 into 1 by 12, that is 10. 120 into 1 by 12, that is 10. Below that, manufacturing expenses. Manufacturing expenses outstanding. Below that, manufacturing expenses outstanding 540. How much is the amount given? 540 and paid in 1 month in arrears. So this is also 1 month. So 540 into 1 divided by 12. 540 into 1 divided by 12. Amount column put 45. Now total the current liabilities. 75 plus 15 plus 10 plus 45. So you are getting 145. You are getting 145. So total, in respect of that 145, put total. So total current assets is 430 and total current liability is 145. So below that, put net working capital. Below that, put net working capital. Capital C, net working capital. Within bracket, put A minus B. Open a bracket, capital A minus capital B. Capital C, net working capital. Within bracket, capital A minus B. Now calculate what is the net working capital. 430 minus 145, that is 285. So in respect of the net working capital, put 285. So as normal sum for previous sums, if they have asked us to calculate net working capital, answer is 285. But for this problem, they have especially asked that 15% safety margin. So we should add 15% on this calculated net working capital so that it will be taken as net working capital including safety margin. That's all. That is the entry for that adjustment. So below that net working capital, put add safety margin at 15%. Safety margin at 15%. Safety margin at 15%. So below that, open a bracket, 285 into 15%. 285 into 15%. So calculate it. What is the amount? 285 into 15%. So in the amount column, put 42.75. In the amount column, put 42.75. Now total it. 285 plus 42.75. Amount column, put 327.75. 327.75. So in respect of the 327.75, put net working capital including safety margin. Net working capital including safety margin. Including safety margin. So this is the answer for this problem number 7. That is, they have asked net working capital including safety margin. So you should normally calculate net working capital. On that 15% you should add, so that will be net working capital including safety margin. So with this we have completed problem number 7. Still two more problems are left. That is problem number 6 and problem number 8. So we'll complete this in the next video and we'll go ahead with receivables management. Okay, thank you guys.